In terms of tariffs, I mean, we're going to have tariffs, mostly reciprocal tariffs, where we go with, and I'm going to be probably meeting on that Monday or Tuesday, have an announcement, probably a news conference, but probably reciprocal tariffs where a country pays so much or charges us so much, and we do the same. So very reciprocal, because I think that's the only fair way to do it. That way, nobody's hurt. They charge us, we charge them. It's the same thing, and I seem to be going in that line as opposed to a flat fee tariff.
I believe DeepSeek is a national security threat, and how do you plan to collaborate on AI initiatives?
On where?
DeepSeek, do you believe it's a national security threat?
No, I think it's happening. I mean, it's a technology that's happening. It's actually, I think we're going to benefit if it's correct what's going on now, that it'll be a lot less expensive. The AI we're talking about will be a lot less expensive than people originally thought. That's a good thing. I view that as a very good development, not a bad development. Auto tariff? Oh yeah, sure, that's on the table. That's always on the table.
From fast-changing tariff decisions to one market that's had a fast start to 2025, these are the stories to watch in business and finance in the coming week. Markets cheered U.S. President Donald Trump's decision to suspend tariffs on Mexico and Canada. But investors are unsure if the tariff talk is brinkmanship or will act to deepen global rivalries and intensify economic attacks on the U.S. Trump's decisions have supercharged market volatility and investor uncertainty. There's little hope of respite in the days ahead. The release of a key gauge of monthly U.S. consumer prices is set to test investor nerves. Trump's tariff threats triggered warnings from several Federal Reserve officials of the risk of an inflation pickup. A Reuters poll shows January's consumer price index, due Wednesday, is expected to show a 0.3% monthly increase. But the monetary policy outlook remains uncertain. Investors are gearing up for a prolonged tit-for-tat trade war between the world's two largest economies. Near-term focus remains on whether a conversation between Trump and Chinese President Xi Jinping actually happens, and if Trump could grant some kind of tariff deferment. With the prospect of future stimulus measures from Beijing uncertain, more investors are avoiding the Chinese market. Chinese consumer price data on Sunday is likely to underscore reasons to keep those bearish bets for now. Europe Inc. is ticking all the boxes: cheap valuations, earnings growth, and momentum. European equities have outperformed their Wall Street peers in the first 6 weeks of 2025, the first time in a decade. Tariffs are a wild card, but there are several potential catalysts for more near-term gains. So the question remains, will this rally last?